All right, y'all. What's up, y'all? We got the currency chick with the gold chasers today. We're gonna go and we're gonna talk about market structure today. Once you learn market structure, you know how to read a chart. And that's what you know that's what you need to know to actually get this money on these charts. So I got a couple people with me today. We're gonna go ahead and I'm gonna show them some. Now some of y'all already know, but we just gotta revisit this. Oh, I gotta share my screen. Look, I'm sitting here. I ain't share nothing. Y'all ain't gonna see nothing. Hold on one second. Let me share my screen. So I gotta make sure y'all can see it. All right, hold on, y'all. Participants can now see your screen. And I gotta get this out the way. This thing in the way. Can y'all see my screen? Can y'all see the chart?
Yes.
I can see.
I bet. So, all right. This is this is how it goes. Um when we talk about market structure, the market basically moves in three ways. It goes up, which basically when it goes up is an uptrend, and that uptrend creates higher lows, higher highs, higher lows, higher highs. And let me draw it. Get my tool. Get my tool. It is down here. So it goes like this. This is the uptrend that the market moves in. So you have the higher low, then you have higher high, and so forth and so on. Same thing, high, low, high, high. So basically, this is this is the high, higher low. I mean the high, not the higher low. Oh Lord, see, it's early in the morning, y'all. Hold on, let me back that up. Early in the morning. Troy, why you didn't catch me? All right, early in the morning. So here we go. I did that backwards. Okay. Got the higher high, higher low, higher high, higher low. So basically what that means is as the market goes up into this uptrend, um, this higher low is higher than this low. This higher high is higher than that high, and so forth and so on. So it continues in that pattern. Okay. Now when you do a downtrend, it's the same way, but the opposite direction. Same concept. And that's when you have the lower high and lower low. And same concept. Got your lower high, your lower low right here, your lower high. Then this a lower low also because the lower low is lower than this low. This is a lower high because it's lower than that high. Okay, might sound like foreign language right now, but it's all gonna make sense eventually. And then of course you have what is basically consolidation or ranging, where the market is just going back and forth and really isn't making no type of structure. Okay, so now you have something called breaks of structure. Let me see if I can hold on 1 second. I think I just messed my little design up. Let me go backwards. Go backwards with it. You have something called breaks of structure. And with breaks of structure, that is basically as the market is going and the direction that is going, when you start to create these higher highs and higher lows or lower highs and lower lows, it's breaking structure at every point. So if we was looking at an uptrend, this is the point right here, this point. And what happens is when it goes higher and passes this point, I'm just gonna put that. I just need when it passes this point and goes higher, it broke this structure point. That is what a break of structure is. Then at that point, the market needs to come back and retrace. It's called retrace, pullback, or what's the other impulse?
Correction.
Correction. There you go. Troy got me. Correction. So if you hear the words retrace, correction, or pullback, they all mean the same thing. And that's basically when the market gives you the retracement or the pullback and it goes to retest where it just broke. It has to do that. And this is the area right here, that point. And I know I'm kind of, going through this, but we're going to revisit this as many
Oh
times.
no, you are. So you saying so it has to actually go past that point to be considered that because if it gets close but doesn't break that number, like let's say that number is I can't see that close, but let's say it's 28.75 and it broke structure. When it come back to retest, it has to go negative past
Think,
23.75
think
or
about
at
it.
least
Think about it like this. Don't think of the number. Think of the structure because it's an actual zone. When I go show you on the chart, you go see exactly what I'm saying. But I'm drawing it first. So that's why I put this box right here because it's an area, a whole area, and it has to
uh,
push away from the area. And I know what you're saying, but you're right. If it doesn't, if this basically came here and if this point didn't break and stopped here, then it's not a break of structure. Yes.
right.
So basically, it'll be sitting at the resistance. This is resistance up here at that point. So I'm gonna show you that too when we get back to the chart. But structure, it needs to break structure. So
That
basically,
structure
like
point being that higher high right there.
exactly. So like I said, once it breaks this little structure, the market has to come back and retest the structure that it just passed. And you always would like to be on the right side of the market as far as they said trade with the trend, and this is an uptrend. So your money is going to happen when it continues to go up. So, people trade all sorts of ways, but this will be the safest play, the continuation. You know what I'm saying? And I'm going to show you that on the chart too. So, and it's the same thing with if it's selling. As you can see, the market was going down, then it broke this structure point right here. And I got the zone over top of here, but we're gonna put it all together in a minute. It broke through it and it came back and retested it. And at the retest, that's when you need to see the candlesticks giving you something to show you that it's going to continue in the down direction or the up direction.
Start
So
looking for your confluences right there.
you heard my student, you heard my former student
I
Troy.
am. I am.
Tell him Troy.
I didn't know a little
Yeah,
something.
Tell him Troy.
yeah. You guys start looking for your confluences right there on that retest. Any kind of sign that'll give you the notion that it's gonna continue in this direction.
This is a prime example. So I got gold right here, and this is the 4-hour chart. So I'm gonna draw some, and then I'm gonna back the chart up. As you can see, this market was going down, right? That big drop, this big drop right here, and this is the 4-hour chart. Then hold up, hold on. Let me get it together. Then after that drop, it retraced back. So it retraced back. Now, mind you, when you see this drop on the 4-hour, the first thing a person would think, okay, we broke structure right here, and because it went past this point, and then it retraced. So you think, okay, it's gonna sell off. But the thing is this: you got to pay attention to what's going on. Now it did sell off a little bit. It came down here, and I'm gonna take it to a smaller time frame in a minute, but right now we're on the 4. It came and sold off to here, but guess what? When it sold here, it created a higher low. So at that point, it's starting to show you, oh, we about to reverse back in the other direction. Because if the market is going to continue to go down, it should have did this. It should have went down, pulled back, and broke this point and kept going lower, but it didn't. It pulled back to here and started going up. So, okay, but we moved too fast now. So now, as you can see, this is the zone. You see it on the chart? That's the same thing I drew, but you see it in clear formation right there. Let me delete this. As you can see, and these zones are everywhere. You're going to start to notice them, but let me back the chart up so you can see perfectly. Replay. Let's say it was Sunday and the market opened up and you saw this right here. Automatic, and this is what you were speaking of, Tony, when you said if it didn't go past that point. As it went up, it didn't go past this point. So that's not a break of structure. Basically, this is a form of resistance. So when you start to see it's stopping at a certain area and not going past, it's at a resistance now. And normally resistance lets you know, oh, we about to sell back off, you know, because it's having a hard time to break through. But if today was Sunday and the market just opened and you saw this, you just don't jump in the market and say, I'm going to take a sale, because it's not really showing its hand right now, you know?
Right.
You have to do a little bit more analyzing before you do something. So some people will be like, okay, well, I see it drop low, retraced back, got resistance, came back, but when it came here, it pushed back up to that zone. So it created this higher low. And this is somewhat a zone right here too. Even if I go down to a smaller time frame, you'll probably see it better. But all this consolidation, you could tell it was some type of support right here, because it consolidated and shot back up. So anyway, if you was to look at this market and zone it off, you would sit on your hands until the market show its face to you. And what I'm saying is it needs to break to the upside or break to the downside. But before that, you don't know what it's going to do, because it's in between this range, in between this area. So that's one thing. But I am on a higher time frame, so I'm going to go lower so you can see what I was saying about the smaller time frames got to catch up to the higher time frames. So I'm going to play it in 4-hour motion. Okay.
So what else you can notice about it being right here where it is? It's going sideways, like where it dipped all the way down and came back up and retested that zone. Mm-hmm. It's not breaking any kind of structure. So that's another reason you would sit on your hands.
You heard my student. Yes, Troy, tell him. So as you can see, at that point, it broke. You see, it broke the zone. So it broke the resistance. It finally broke through and retested the top part. And once it retests the top of the zone, it's starting to create that zone as a support zone now. And support, okay, I don't think I said this. Support, when you got a support zone and it's holding, we looking to buy. When you got a resistance zone and it's holding where it's not breaking through, we looking to sell somewhat. That's what that basically is. So like I said, as you can see, it broke through, right? So now it's at support. And at that point, it should continue to buy up. But you look for your candlestick formation to give you the entry to continue to buy. And it did buy. It came and retested again. Okay, you see how it came back, retested the zone again, pushed up a little bit, retested the zone again, pushed up a little bit. And then this was Friday, the end of the market. So more than likely, I said more than likely, but I don't even like to say this because I don't like to base Friday off of Sunday. I need to see something first, but it should continue to push. Should. But we're gonna go back and I'm gonna do it on a smaller time frame so you can see. We're gonna take it to the 1 hour. As you can see, here it is. And let me back it back up on the 1 hour. Let me see how far I can back this. I'm gonna have to start pushing it together like this. Okay, we'll back it up. This right here, all this resistance, same thing, it's just on a smaller time frame. So the candlesticks are 1 hour piece instead of 4 hour per candle. And the same thing, it went down, retested that zone, went down a little bit more. And eventually, bam, broke through. This is now a break of structure. It finally broke through. So breaks of structure happens on all time frames. And you have to first decide what time frame you want to do your analysis off of and basing your trades off of. Some people like to do it from the 1 hour. Hold on, I say this first. I look at all time frames because I need to know, like the monthly, I need to know where the resistance and the support is on the monthly, and I on the weekly and on the daily, all the way down to at least the 1 hour, because the higher time frame holds more weight. So if this was a monthly chart and you trading based off the 1 hour, and if this was a monthly chart and we got here, it's a strong zone. So it's gonna lollygag around for a good little while before it actually either push back down or break up. So yes, you need to be aware of where those higher time frame zones sitting at. Yes, but we're not going to actually take the trade from the month. Swing traders do, but we're not going to do that. We're going to go down, and like I said, look at the 4 hour. See what? Hold on, what I'm doing. Look at the 4 hour. See what that's doing. Then you go down to the 1 hour. See what that is doing. But like I said, breaks of structure happens on every time frame. This is the 1 hour break of structure. Here's the structure. It pushed past it. So that's called a break or impulse. It's impulse, correction, continuation. Same thing, break, retest. So it broke the zone, came back and retest. Bam, retest the zone. As soon as it retested the zone, what it did, push back up. And as you can see, it's basically looking like what the 4 hour was looking like, but on a smaller time frame. So, and you can trade all of this, because what I do is once I look at it from the 4 and the 1 hour, I do my entries off of a smaller time frame, like the 15, the 30. Sometimes I even take it from the 5, but you know, that's kind of a little more advanced. So I would prefer a person to do 30 or 15 minute. And that's how I incorporate my fibs and stuff. But fibs is a whole different ball game. And I think I do fibs on another. I might show y'all on here, but I'll probably go deep into it on another call because that's a whole lot. So, let me also show you. Let's see. I'm trying to show you. If I go, I'm gonna take it back again. Take it back. I'm gonna see if it's gonna give me what I'm looking for. So let's say if this market was doing this on a Sunday and said, okay, I see it got resistance, and you waiting for it to do something. Then I go down to the 15. And as you can see, now I'm on the 15 minute trying to see something. And it's basically chopping this. Chop, 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 consolidating basically. That's what it's doing. Now you see it shot down. This, you can get money off of this, but you got to know how to do it. Let me see if I don't know if I want to show this one because of what it did, because this just created a double bottom. Yeah,
Yeah, but we need to see all that because,
yeah,
like, I know what you're saying. Like, it could be deceiving. Like, once it's shot down, you
yeah.
probably had a chance to get money once it, like pretty much showed you and it aggressively was moving. But then it would have to be, I mean, you're going for a short, but obviously you would probably consider being more, a short turnaround,
What?
basically. I
Yeah,
mean,
yeah, 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 yeah. Exactly.
yeah.
Because at that point, this play it's called a counter trend trade, and counter trend trades are short plays because that's really not the way the market is moving. So
Mhm.
that's why I probably won't put short on here because a person probably said, "Oh, it's gonna go all the way back down here," and you would have got bust upside the head because,
Right.
as you can see, it started to turn around again. So, and that's another reason why they said trade with the trend, and the trend is actually the trend that you're looking at on that 4 hour time frame, that daily time frame. That's the trend, really. Um, so, and I could show you how to get it, but that won't a good. This just an impulsive drop, and more than likely, news might have did this. And then, as you can
Definitely.
see, it pulled back, came back, and created a double bottom. Basically, this is a liquidity sweep because this candle, when you're looking for breaks of structure, the candlestick got to close past the structure. This did this, and went right back into all of this structure right here. Nothing broke past this candle right here or the point of the candle. So, yeah, you would have got faked out, and you probably wouldn't have caught this. If anything, you probably would have got in the trade based off of, oh, it's sitting at resistance, let me sell. You know what I'm saying? It's sitting at
Mm.
resistance, I'm gonna put it in a sale.
That's a risky one.
That is very risky.
Because the
Very
overall trend isn't saying it's going down, right?
Right.
Yeah, yeah, yeah. So if you put in a sale, where's your stopping point at? Where your take profit point at?
You don't
You
know
know what I'm
where how
saying?
far it's gonna sell down because it could have sold down to that previous low. It could have sold down to there, but we had no way of knowing.
The only way it really didn't break no structure. Like it didn't break one out structure way down here. If you and that's the point of break and retest. Now this 30-minute choppy mess right here, but it was just an ugly trade. It's an ugly trade. So somebody would have got, bust upside the head a little bit. But okay, so let me get on that. I might got to go backwards to show you how to enter it because what it's doing right now is not giving me what I'm looking for to show you something. Let me see if it's right here. Okay, maybe right here. Maybe right here. God, this thing in the way. Let me split the screen right fast. I split it. When I'm on a 15. I need a 15 and a. Oh hell, that's a different screen. Hold on. I think I gotta go higher than go
So
more.
yeah, Tony, like what you gotta be mindful when you're looking at higher time frames. When you go
Mhm.
to a lower time frame, you have you have your higher time frame structure, but then you have a structure inside of that structure on the lower time frame. So you
Right. And I
can
noticed that because I've took some losses because I play, like I do the 5 minute, 15 minute. I'll look at the other ones, but not as much as those. And, like I was telling Reva, I'll scap to do some take profits, real quick, but there's no real general way to kind of I can't there's no substance with my trading then. You know what I'm saying? Like I need to learn and understand this part of it because I'm going off of a short trend. Like I'm playing with a candle. Yeah,
right,
I
right,
might have
right,
gotten
right,
$200 out of one candle, and then turn around, not looking at the overall trend. And my mind is going up, so I'm making plays for the buy. And I'm thinking because it's being bullish, but then really the overall is a bear, and it ends up
right.
going down. And yeah, I got my profit, but then it took that profit, and now I'm in the negative. when I
because you
probably
didn't
should
hit
have just waited the whole, I shouldn't even made a play within that hour anyway. If I was, because when she said the 4 hour, I'm like, I look at the 4 hour, but I don't really make my plays off of the 4 hours. So that's good information right there. To like the overall trend you're looking for is in that 4 hours. So I can really not
Exactly.
play up for that now.
yeah.
So your play, your even with a scalp or whatever the case, yes, go down to the small 15-minute or whatever to do your entries, but you have to know where those 4 hour zones sitting at, because it's gonna stop
Right.
you right there. It's gonna
Yep.
stop you right there.
Mm,
You can't be too zoomed in on that 5 minute chart. And just because you
right.
in profit, you like, okay, it's gonna keep going. You gotta zoom out and look at that 4 hour to see the overall direction. Because you might be at a heavy point of resistance or support. And you looking on the 5 minute like it's about to keep going, but you at a point where it's about to say, oh no, I'm going the other way.
Right. And I can't even see it because I'm like you
Yeah.
said, I'm
Yeah.
all under
You
five
too
minutes.
locked in.
Right.
So this is what I'm trying to show. This is not a good point though, but it might play out. But this is a break of 15-minute structure. I'm trying to show you how to get in that trade you're talking about. This is kind of ugly though. I'm gonna find another one. So basically, the same thing I said on 4 hour, 1 hour breaker structure. It does it with the trend lines. So you're gonna draw your trend lines once I show you that too. And once it break the trend line, it need to come retest the trend line. Now at that point, when you see it do that, you looking for, we talking about buys now. So we looking for a bullish candle, which that's a nice one right here, this yellow one, because you barely see any wick on any side. And then you see this second yellow one. So that's a sign to tell you you had two bullish candles back to back, basically engulfed all this stuff right here. You had a break and retest of the trend line. Those are signs. I didn't give you two signs that said this market about to buy, and it also broke this 15-minute structure point. It went past it and came back a retest. Now that's three signs. At that point, let me see some. Now I'm doing some random stuff right now because this is gold. So you probably can put it right here. Probably. Let me see. At that point, you would enter the trade and your stop loss. Your stop loss supposedly supposed to be, below the previous structure or whatever. And you see it's creating higher highs right here. So these are structure points. So you got your stop loss below the previous structure points. And at that point, it should continue to go up and shouldn't hit your stop loss. And your take profit point will be based off of the actual. Well, this, you still got this right here. So you don't know if it's gonna break through this yet. You know what I'm saying? We know because I didn't back the stuff up so I can see. But I don't know. This ain't a good example, but I'm gonna play it
But
anyway.
would you create that zone off of any um I guess any change in structure? Like if you go to a graph, what would
This
make you
zone,
break the zone? Because you like you showed us you had higher highs, higher lows, and then you went to lower highs and lower lows on the other
mm-hmm,
side.
mm-hmm.
I can pick either one of those, or are you waiting for, well, actually, I guess you're waiting for it to go and break the structure that it broke. That's when you create your zone.
Well, you talking about this yellow box right here?
Right.
No. What happens is uh what happens is when you first open the chart, you look at it and see what's going on. So like I said, if I first opened the chart and I saw this and I ain't see that other stuff back there, even though it's below the zone, so that's fine. I know, oh, the market came up here and pushed back down. The market keep coming up here, pushing back down. So
Oh,
at
okay.
that point, I draw the zone. Now, mind you, I'm on a 1 hour chart now, but I think I drew the zone on that 4 hour.
Yeah, on the 4 hours. Yeah.
Exactly. So even no matter what time frame you draw it on, as you go down on the charts, you go still see it. So um and it's basically holding regardless of what time frame I'm on. But like remember I told you the higher time frame, the stronger area, right? So this is a strong area. And even up here, like you got that one little point up here. This is actually a supply zone and it pushed all the way down. So if the market comes all the way back up here, I'm gonna zone it out because know why? More than likely it's gonna stop right there. So basically, what I'm showing you is once it break through here and retest, if it retests and holds at support and holds and start to go this way with bullish candles, it's going back to retest this. It'll always go back and tap where it left. You know what I'm saying? So whether the downside, whether the upside, this was this one instance, and it hasn't been back up here yet. So more than likely it's going back to touch this zone. More than likely that's what it's going to do. It could break the zone, yes, but if we go take a buy, and once it break through this zone right here and retest it and show, once it does this, once it go up, come back, retest, give us support a couple of times with some candles and start to go this way with some bullish candles, we taking it trade up to here. That's your next destination. You're not gonna take it past that because you don't know if it's gonna pass this.
So there's a chance that you guys will sit. You'll open the market. You'll see it being real volatile, and then once it settles down, a lot of times you'll sit there and wait. So you might not even have gotten in the trade until like they come back from lunch, because it could have. I'm not saying generally every day. I'm just giving you an example. It's been days where you probably sat there and didn't really see nothing until later on in the day. You know, so you just was patient, waiting for it to show you enough.
You need to be patient because know why? Like if you just jump in, let's say the market open and you saw this and you jump in. Why are you jumping in for? It's not giving you no type of sign. You just see, oh, it's going down. Let me jump in. You know what I'm saying? And that was from the same example we was talking about earlier. You don't know how far it's going to go down because you really didn't analyze anything. You just see a sale and you like, oh, I got to get in the sale.
That's what we call.
I think that's a lot of the problem with especially new traders. You know what I'm saying? Like, because I usually don't even look at it at 9:30. You know, because I just know it's going to be moving so crazy. Well, even though I'm telling you now, I'm not. You know, I'm still learning this side of the game, but I was just asking because how much patience do you really need in this? Because is it days you guys don't trade and you watch the market all day?
So listen, we looking at gold. You can catch a move every day on gold for the most part, because I don't. And this is another thing. I like being up at night trading. Like I like London. London is at night 2, 3 a.m. in the morning, and it rolls over into New York session. I don't like trading New York session, and the reason being is because, and I know it's a lot of volatility because a lot of news come out at 8:30 and push it this way, but it also, one, I feel like this. The real pre-market is like 8:30 or something like that of New York. And then when New York really opens 9:30, I feel like this. It looks like to me by 10:30, it's over. So I was like, you really got one small window to me to get your trade in. And then sometimes, yes, probably about 1 o'clock in the evening, something might happen. But at that point, I want to be done. So in actuality, when that market, let's say Sunday, 5 o'clock that p.m., that market is opening, 7 p.m., everything is settling down, the spreads went down. Like if a person like to trade Asian session, gold sometimes really be moving during Asian session too. You could catch a trade, but you have to analyze the chart, because if you analyze the chart and at 7 p.m., oh, it's ready, then yeah, you could take that trade at 7 p.m. And I think you was doing options, and options is different because I don't think you could trade at night with options.
No, you can't.
Yeah. So that's the difference. Like when you doing futures or Forex, you could trade all day, you know, from that 5 p.m. until that, all the way up until it closes at what, 4:30, 5 o'clock. But then it opens right back up. So it's like 23 hours you can, you know, and with Forex, you can hold your trades into the next trading day. With futures, you can't. I know with the prop firm, you can't hold the trade. You got to get out the trade. So yeah, with Forex, you can hold that trade. You can hold it as long as you want to hold it, really, if you swinging it. But so yeah, you need to learn this part of it, and you're gonna learn it. So back to what I was saying with this, as far as entries, I might have jumped the gun, but I'm gonna play this right fast to see if it does. So it came back and touched this. That's why I said I think I had it in the wrong spot. It touched the stop loss. I knew that wasn't a good one anyway. But hold on. Let me stop this for a second. I'm trying to show you this. Let me take this off. We're gonna do some live trading one day. One day we're gonna get it, might be this right here. Didn't I have a breaker? That must want no good breaker structure. So as you can see, the 15-minute, it broke structure again. It came down, did all this. This is a trade in itself. You could have caught this once you learn how to catch it. This little sell off, and with gold, that's a good little swing, you know. But then it reversed, broke the trend line, retested. This might be it. I think this might be it. But I'm gonna have to do this live so I can show you exactly what I'm talking about and mark up my chart. And yeah, this it. So at that point, your stop loss would have been below that area, below here. Or if you don't want to risk that much, you know, put it below the trend line once you draw the counter trend line. And as you can see, you got the bullish candles on the smaller time frame. You enter for that buy and just let it run. But we're gonna revisit this again because, like I said, that wasn't no real good. I ain't like that. But let me go back in time. Let me see if I can go back in time and get some from the past. I got some charts already marked up. Let me see. This might be, how long ago is this? That's October. And you're not gonna win them all, but once you start to do this and analyze, and you know, your probability will be better. Let's just say that your probability will get better. Now, with TradingView, so you can, you know, back the market up for practice, you know, help yourself learn or whatever. As you can see, this was a point when it dropped. It's resistance. So here it is again. I drew a zone. And let's say it's Sunday, you saw this in the market right here. Now people see these three candles that's in a buy and think, oh, it's about to buy. You don't know that because you don't know if it's gonna break this zone. So got to sit on your hands for a second. And mind you, we saw it drop, but let me back it up to the 15-minute. This is how you talking about trading. If you trade zone to zone, and I used to do that, and that works also. It works perfectly. This was a zone of resistance, and it broke through. It went up here, came back down, came here again, and started giving me resistance. So more than likely, you go take it back down to this zone right here.
And when you looking for zones, you're looking for anywhere where price broke through and pushed away.
Yes.
You see what I'm saying? So like anywhere price resisted and then it broke through and it came back and retested, that's where you would draw a zone at.
So usually if it'll consolidate, so to speak.
Yeah.
And then once it goes into another direction, but it comes back and breaks where it consolidated at. That's what you're saying?
Yeah, there's zones. It'll consolidate. it'll consolidate at the zone before it either break through it or go back downward, or you know what I'm saying. So that's what creates, basically the market is slowing down. It can't break through that zone. So that lets you know. Let me put a zone right there, because apparently, like with this, it's not breaking through it, and it pushed right back down. Then it came back up here again. Look what it did. I'm on it 1 hour. So 1, 2, you got like 5 candles, 5 hours of BSing right here. So that lets you know, oh, that's a resistance zone. It's resistance. It's not breaking through it. So draw your zone, you know. And
basically once it breaks either way, is you can make some money right there. You just don't know how much. So but it can be a play, is what you're saying.
The how much, that's where the fibs gonna come in. I'm gonna show you.
Okay.
I'm gonna show you all of that.
But I'm just trying to understand, like, regardless of what,
it's gonna be a play, yes. Because once this resistance, it's gonna sell off. That's the play. The play is the sell off. Now, before I learned fibs and stuff, I used to trade zone to zone. So when I saw it sell off, I took it right back to the zone. So my take profit point would be at the zone. You know what I'm saying? And gold. What is it? 144 pips. That's a lot with gold. A lot. So at that point, I used to go down to the smallest time. Well, I really didn't. I used to do it from the 4 hour, just basically 4 hour. But you could see on a smaller time frame, it broke this little 15-minute structure. And I don't like that, because that really don't mean much. But like I said, I done backed it up so we really can see it. Just like a little cheat thing. And these 3 candles right here, that yellow, that doji, and this black one, that's a evening star. So I know candlestick patterns too. So that's gonna let you know it's gonna sell off. Now I'm gonna play it to see if it go all the way back down to the zone. But I'm gonna show you something else too. Boom! You see that? It went right to it, and it damn near touched the next one. That's called zone to zone trading. It works very well for a beginner who trying to get some money without all the fibs and all this extra stuff. It works very, very well.
But what would you consider a zone, though? You talking about those 2 zones that you created?
Yeah, these boxes. Okay. They're everywhere. They're everywhere. They're on every time frame. So if I go back in time, and I told you, all you do is you find it by
Yeah, I understand that part. I saw you had 2 zones. I wasn't sure if you was talking about those 2 zones would create a zone, or was it something else that wasn't drawn in there? That's why I got what you were saying.
Yeah, this green one, I drew this based off the 1 hour, because as you can see, this is consolidation. It went up, retested this zone, went up to that. These orange ones I drew off of the 4 hour. So like I said, these zones are on every time frame. So it's good to draw them on a 4 hour, because that's a strong, time frame. I just threw this one in there because I didn't know if it was gonna touch this or go all the way down. So I did let myself know it is a zone right here too. So that's what I'm saying. Be mindful of that when you trade, and you say, I'm gonna take it from here to here. But guess what? It's a zone right here. It could stop you right here and reverse back that way.
It's really even 2 zones in between. If he was to go down to like the 15 or the 30, it's one like right in between.
Yeah, because they're everywhere.
And the green. So it's, you can't.
Right here. They're everywhere, but the higher the time frame, the stronger the zone. So that's that. But once you get this fib and this trend line going, you gonna see what's going on. You gonna see what's going on. But we got to get past this point first. And I ain't gonna even say that just yet, but that's a double top. But that's a whole nother story. If we go back, let's see, right here. This was a 4 hour break of structure right here. So it broke to the upside. Came back. So basically what it did was retested 4-hour structure. That's what it looked like. And when I do fibs, I don't know if I want to do this. Okay, bam. Let's see if I ain't look at the daily now, so I don't know. And I'm not gonna even look at it to see if this right here. When you get fibs involved, you draw fibs from the points of structure. And being that this is an uptrend on this 4-hour, because as you can see, is creating higher highs, higher lows, higher highs, higher lows, higher high. So like I said earlier in the recording, it broke this structure right here. It broke this 4-hour structure right here. We back on the 4-hour. 4-hour. I would like you to analyze on your 4-hour. It holds more weight, a lot of weight. It broke this structure right here. And guess what? It came back and basically trying to retest this area right here. And when we said zones, you really supposed to draw it from the body to the candlestick, whatever. But this is kind of like a retested area. And as you can see, it created this wick when it got close to here and pushed right back up. That is a sign of it's rejecting off of this zone. Now, this little candlestick on this 4-hour don't mean nothing. But now let me go back down and look at it based off the 1 hour and based off the 15-minute. And I'm going to show you something. Okay, this was a strong candle. Came back, did this a little bit, came back. It's trying to push back the other way. So, and I'm going to have to show you divergence. You know about divergence, though, don't you?
A little bit, yeah.
Yeah. So, at that point, I might be going extra with it, but I'm going to do it anyway. At that point, like I said, if this is an uptrend, we draw this field from the low point to the high point. And fibs basically is a retracement tool, and it helps you with your entries, because what I was saying was the 50% and the 61.8 is like a good golden zone where you like the market to retrace back to or pull back to. And at that point, we sit here and we see if it's going to swing back to the upside based on, where it's sitting at. Now, we don't know. We ain't got the confirmation yet, but I'm going to also show you this. The trend line goes along with that. Now, you just got to watch this, because this is, I'm going to have to revisit what I'm saying to you with this one, because I'm kind of being extra with it now. And I won't try to go all the way like this, but at that point we go down to a smaller time frame and trying to see if we can get an entry. But now you saw the 4 hours is in an uptrend, but this 15-minute is in a downtrend. So in order to get that entry to ride this trade back up to the upside, you need the smaller time frames to reverse and go back upward. And in order for the smaller time frames to do that, you have to start seeing higher highs and higher lows forming on the smaller time frame. Now, let's see, 5 minutes. It's really not doing nothing right now. Now we did get like a double bottom right here, slight breaker structure, but I don't like that just yet. So let's see what the I'm gonna play it. I'm gonna slow it down before I play it, so I'm gonna go too fast. So this the point where we talking about we at a sweet spot, but we sitting on our hands because we need to see if it's gonna give us what we need to get in the buy. And it didn't. See, it broke down further, right? Grab some liquidity. Let me go back to this higher time frame. Now look, hold on. See, this is the crazy stuff right here. It snatched the liquidity, pushed all the way back into this 4-hour zone. Remember I created this 4-hour zone?
Mm-hmm.
Pushed all the way back into it, and now it's going up. This beautiful rejection, that's some beautiful rejection right there. So that's definitely a sign. And this candle right here is called a pin bar.
So yeah, so that's showing you, okay, it's going to grab liquidity, and that's basically by the way that that candle looked. That
Yep.
probably was its main objective. So it's still probably going to continue to trend the way that we think it's supposed to, because
Exactly.
it looked like it just went to go grab liquidity.
It snatched it and went right back into that zone. And when
Mhm.
you see these long candlesticks from the bottom and pushing up, the buyers is pushing this sucker back up. If you see it in the opposite direction, if the wick was at the top going like this, going downward, that means the seller's trying to push the market down. And this candlestick beside it is beautiful. That is a bullish candle. Barely no wick. That is beautiful. So me, yep, I'll get in the buy and my stop loss will be below here. So one more thing I need to see. I was trying to see if it had divergence. It does have divergence, but and that divergence is on the 15 minute. So that's exactly what it did, little sneaky bastard. Right here. Divergence is basically when the
it's two things doing the opposite.
You heard my student, tell him, Troy. So
two things doing the opposite.
You know, the chart, the candlesticks is showing you it's going like in a downward motion, but the RSI is showing you is going in an upward motion. So basically, it's letting you know that a reversal is coming. That don't mean just jump in because it's an divergence, jump in. No, because you see what just happened. BAP. So at that point, I'm gonna play. It gave us that bullish candle after it did this little thing right here. I'm gonna play it from the 15 though. And if you was to get in this buy, your first stopping point, your first take profit will be right back here at this zone because you don't know if it's gonna break it. And you know, you also will have other take profit points based off of the fib, because this would be your second profit point. That would be your third. That's based off of the fib. But these numbers mean something. But we're going to take it one by one right now. So let me go back to the 15 because you enter on the 15. Now, it still haven't broke structure to the upside, but it gave us divergence, wick rejection, got this bullish candle. That's three confluences right there. If you wanted to break right here, this little structure right here, then you could put a little zone right there. And once it break that, you can go for it.
Right, because if I was coming in right now and I just started looking at the chart,
you go sell.
That's where I would create my zone at. If I just came in, look, that consolidation right there.
Yep.
That would be a good place to set my zone.
That's a great place. A great place. So yeah, right now it's giving us 3. I just want, you could also draw a trend line, but I don't like it right there. I don't like that steepness. So yeah, the zone is better. But let's see if it give it to us. Because we ain't in it yet. Me, I'll be in it because I'm crazy. But we ain't in it yet. Hold on. We ain't in it yet. Okay.
Don't be that aggressive yet, y'all.
Huh?
Don't be that aggressive yet.
As you can see,
that market will humble you, and it'll humble you fast.
On these smaller time frames. Now, if I go look, I'm on the 15, right? It gave me another bullish. It's showing you support right here. If I go down further on the 5, look, this is what I'm saying. Remember what I said? Every time frame gotta reverse back in the direction. It's giving me higher highs and higher lows. You see what I'm saying? Just on the 5 minutes. So it's giving you what you're looking for. It's giving you what you're looking for. You see that? It's going higher. Now, this right here didn't go higher, but this created a lower high. I mean, a higher low. Yeah, a lower high. God damn it, I'm messing up. But anyway, it's looking good. It's looking good for the buy. It's looking good for the buy all the way. So let me see. As you can see, yep. So look, this is at the 1 hour. It's pushing. It's slowly pushing. So, ooh. Now, I don't like this breaker structure, but I'm gonna play this off the 4 because we going off the 4. We going off the 4. Ooh. All right, let's see. Let's see what it do. Let's see what it do. Let's see what it do. I wish I had a trend line on here though. Now look, see, it bust me upside the head. And came back and did this stupid shit again. And went back. You see, it went right back into it.
Mm-hmm.
These too many candles on the small time frame. I don't like that. I don't like that. I don't like, no. I ain't like what it just did. Okay, hold on. It looked like it took that play from the 1 hour. It did. So that got me big time. It took that play from the 1 hour. So this trend line, hold on. Let me delete that. This trend line. That's ugly. That ain't no good trend line. 4 hour trend line. 4 hour market. So no. So what it looked like it did was based off of that 4 hour break, 1 hour breaker structure, it continued to go down off of that. It continued to go. So it played that 1 hour sell off instead of going for that buy on that 4 hour. It broke through it and sold off. And that aggressive push came from this 38.2. Yeah. It came from that 38.2 and sold off. So divergence lied, everything lied. So I would have got busted upside the head with that trade right there. But I watch my trades anyway. I think maybe because it gave this serious aggressive push down. This was really aggressive with this down push. And then when it tried to reverse back, it didn't even 38.2 and it just went straight down. All right, so no, that's a bust. That's a bust. That's a bust. Now let me go to the daily and see what this daily look like. I'm gonna delete that. That's a straight bust. Hold on. Now it look like it's creating a lower. What? That's last year. All right, I might could do the trend line off of here. 15 minute. I can. Let me back it back up. Back it back up. So it did all that, and it hit the negative 27 going to the downside on that field, but we back at the same spot. Divergence again, lying to us. So it's showing divergence. I would draw my trend line. Hold on. I don't know if I want this one or that one. That's too steep. I don't like that. I don't like that. You'll draw a trend line and look for a break of the trend line. And once it break the trend line, this on the 15 minute, it broke and retested, and then it push up. But we're gonna go deeper into this stuff later because it got me lying now, Troy. It got me lying on here.
It can do that though.
Yeah.
The market respects what they want to respect.
So now it's about to reverse. I don't like it. Still like I'm trying to show. I don't like none of that choppiness, but I'm trying to show like how, okay, this is a 1 hour breaker structure right here. Let's see if I get it right this time. Mm-hmm. And when you use Phipps, it should be get rid of reverse. And mind you, I did not really deeply analyze this stuff. So I could be wrong because I ain't, I just found a chart and deleted some stuff. You got the low, higher low. Low, why I keep saying that? Higher high, higher low. This is them 3 candles right there is a morning star. So yeah, you could have got in the buy from this candlestick right here once you saw this. That's another reason why, like, you got to be real careful. Like, we looking at the 4 hour, the 1 hour, doing that analysis, and then we go to the 15 because it will fool you. You know what I'm saying? So in actuality, you could enter the trade based off of the 1 hour or the 4 hour. When you get this beautiful bullish candle right here, that's a bullish candle all day long. At the end of the day, like Troy said, the market could do what it want to do, and let's see if it swing all the way back up there and try to snatch all that stuff. But that is a bullish candle. It engulfed all that right there. So, and your stop loss supposed to be below. I wouldn't put it all the way down here. This is gold, We'll figure that out later. We'll talk about stop losses real good. I'll put it like beneath the what you call it. So okay, now this one is playing. All right now. I'm trying to catch that. Hold on. There you go. There you go. So basically, that's how the other one also went. There you go. You see what I'm saying? So, all right, we got one. But once you learn fibs, you're gonna learn all of that. And man, you see, if I took this entry, like I said, from this candle right here, and I'm just looking at the 1 hour. Now watch when I go back on a smaller time frame. Let's see. How does she? Because let me see if it do it. Where's my? I gotta go back. So look, okay. This is why they tell you go to the smaller time frame and get your entries. If you would have went to the smaller time frame and saw that one candle I just highlighted was all four 15-minute candles. You know what I'm saying? So like you would have missed some of it, but this trade played out so good, you still would have got a good amount of money, even if you missed, this early entry and you just took that entry off that 1 hour. But some people take it to the 15-minute and see a couple of bullish candles and say, okay, I'm gonna get in this trade. So, it's just an early entry trade. That's all it is. But if you want to be conservative, and they go to trend line, this kind of ugly, but I did draw it from a smaller time frame, I think. And it broke the trend line, retested the trend line. And right on the trend line, we got this morning star too. That was beautiful. But now look, what you was talking about, some people ain't got time to be sitting here all day, because let me see how long this trade took. If you would have took it from the 1 hour candle. Let me measure it. If you would have got in after that candle right there, this trade took, hold on. I gotta bring it in the screen so I can do it again. This trade took
week.
See, yeah, no. That took a week to do all that foolery.
That's OD.
Ain't nobody doing that.
That's over the weekend too, ain't it?
Nah,
it's during the week.
It finished, kind of finished up on Friday. So, oh no, this bullish thing happened on Friday. So basically, you would have had to actually get it here. Cause I ain't gonna hold no trades over the weekend. So if it would have did this on Friday, then closed. If it would have did that on Friday and then closed, the market closed Friday, I wouldn't be in no trade. You know what I'm saying? Because I don't play them games. Like, I'm not holding, because you don't know what's gonna happen. I would have waited till the market opened back up, and when it opened back up, it pulled right back down. and did it again, and I would have got in but it still would have took 5 more days to complete all the way up. But you could have took it up to, because like I told you, your first take profit point will always be the 0. Your second take profit point will be the 27, and your third will be here. So if you just took it from here to here, what was that? 11 hours. 11 hours. That's good enough, because that's gold. So you still would have made some money. But I kind of went too much deep in, because I won't trying to do all this today, because it sounds like a lot. So I'm gonna have to do it over. Yeah, because putting fibs on here, trend lines on here, all that. I just really wanted to talk about breaks of structure and market structure, because once you see that, you're gonna see the other stuff, and you're gonna understand the other stuff. So yeah. But I don't know if let me see. Y'all still on here?
Yeah.
Oh yeah, they got their mics.
Yeah,
All right,
I'm here.
so yeah, I'm gonna leave it at this. But what I'm gonna do is, because I didn't want to incorporate all this extra stuff, and I did anyway, and I didn't want to do it because I want to like slowly break it down. But you understand the zones, right, Tony?
Yeah, I understand them. Yeah, I know now when the best time to get in, because I never incorporated the consolidation with that's where I create my zone. I was kind of like, I guess it was still the same principle, because I was saying when it comes back and retests that point, I can make my zone there. I did know that part.
Remember,
Yeah.
it's not so much the consolidation zone, it's that point right where it touched and reversed. So like once it breaks through and comes back and retests, you have that point where it came up to the consolidation, and then it pulled away, pushed through, came back and retested. That's where your zone is.
So as a matter of fact, this how somebody taught me to draw these zones in the past. Somebody was like, you got a little thing right here. Wait, do you use TradingView, Tony?
I do. Hold on one second.
So for the people who can watch this video, we have something up top. I think it's on Top Step too, because theirs look like
it's got TradingView on it, but I look at it, but I haven't really dove into it. You know what I'm saying? Like I've opened it up, but I don't really use it and factoring it into my trades. I haven't really done that yet.
Well, this will help you with these zones. And I say that because when you turn the candlesticks into graphs, you'll see the
line graph.
Yeah, a line graph, you'll see the points better. So all these points, like right here, these two little points, hold on. I just can't add because I've been doing it so long, but you got a point going here and a point going here. They ain't nothing but the candlesticks right there. Right here ain't nothing but candlesticks. And then when you see points on the opposite end, like after it went up past the graph and it comes on the opposite end, that lets you know that's candlesticks right there. So on the opposite side of the zone, and you could draw your zone like that. But if you wanted to be precise, because it should have been precise, to be honest with you, it should have been more like this. So basically, and this the top of the candlesticks touching the bottom part of the zone. It broke through the zone, and these the candlesticks touching the opposite side of the zone as support. So this is resistance, that is support. Now, if I change it back, you will see it. Look at that. Now, oh, that's beautiful. Look at this wick. Look at that. So that'll help you line it up more precise, because as you can see, let me move this out of the way. You see it's wicking right off. And look, it touched it perfectly. Look at this. the wick came down, but it went right back into the zone. Look at that, bap bap. So you like, I like, shit. I
Can
just
you
start
see
using.
right where her explanation of where her fib didn't play out right?
Divergence, yeah, right here.
That zone would have told it. Because when it went up and it didn't break through that other zone, that green zone, I should have told it it won't gonna go all the way up. It
You
came
heard
back through it
too.
and break. It came back through and broke that yellow zone at the bottom, and it stayed under there. So right then she would have stopped looking for buys.
Yep. But that's basically, yeah. So that would help you zone this stuff out. And you could do it anywhere because, let me play this out a little bit, get it fast, and show you. I need to start lining my stuff up perfect too. Because you could be a zone-to-zone trader. You don't need fibs, you don't need trend lines, and it works perfectly well. And that at that point, you basically saying, and I even got these zones up here and it's still going, respecting them from those past zones. Look at it, went right to it and shot down. And it's you basically saying it's gonna go from this zone and go back and retest this zone, and you still gonna get the money, you know. So it's a bunch of ways that skin a cat. I think we about to. Are we in January? Yeah. Okay. Let's see. It left this zone, went to that all these zones, came back, touched that zone. Zone to zone trading right there. Now it's about to come back to where where the market is currently at. But we're gonna revisit this. You see how the zone, it went all the way up. Zone to zone trade. Money, 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 money. So I'm gonna have to go live. I might go live this week. I gotta think about it. So we could look at this live. I gotta mark my charts though, because I haven't marked my charts yet for the week to see what I see. But I'm a Forex trader for everybody. I dabble with futures, but I like Forex. So I'm gonna mark multiple charts, not just gold. And we're gonna take it from there. Hopefully this helps some people understand some stuff. Like I said, I'm gonna try to do a couple more calls before I go back to the prison. But yeah, guys. So we've been on here long enough. We'll try it again eventually. So hope y'all enjoyed somewhat of this call.
Yeah, that was good, man.
Do some research on structure.
I wanted to make a slide, but I ain't had time. I'm gonna make some slide, like do a PowerPoint, and so you know what I'm saying. Because right now I'm still all over the place with it. But I'm gonna get it straight.
When you record it, that's cool because you always can, somebody can go back and check it out.
Yeah, I got a lot of recorded stuff. So I'm gonna drop this video link under in the Discord. Is a tab set education. I'm gonna put all my stuff under that, so people need to watch that because I got some stuff. And it's gonna help people in the long run. Like when me and Troy was doing this, yeah, it seemed like some mumbo jumbo, but
but I understood what you're saying though. That was pretty good. I'm about to but let me jump off here because I'm in a restaurant now. It's gonna be a little loud. So
okay. All right, y'all. We get back with it another time.
I appreciate you.
All right.